Should you wait for interest rates to drop before buying a house? Honestly, this is probably one of the biggest questions we are getting from buyers right now.
And we completely understand why. Buyers are hearing so much conflicting information in the news about interest rates, home prices, and the housing market that a lot of people feel stuck trying to decide what to do.
Some buyers are thinking, maybe I should wait 6 months. Others are wondering if rates are going to improve and suddenly make homes more affordable again.
But what most buyers don't realize is that waiting can create a whole new set of challenges. So today we are going to be going over the pros and cons of waiting for interest rates to drop and what buyers should really be focusing on instead.
If this is your first time to the Colorado Homes and Living YouTube channel, I'm Jill Jackson.
And I'm Kelly Mates. We are local realtors in the Denver metro area, and this channel goes over all the ins and outs of Colorado and navigating the real estate market.
So if that's the type of information you are looking for, be sure to like and subscribe to our YouTube channel so you never miss an update. So first, let's talk about why so many buyers are waiting in the first place. A lot of people became used to extremely low interest rates over the last few years. And mentally, it's been hard for a lot of buyers to adjust to today's current market conditions.
Exactly. We hear buyers say all the time, I'm just going to wait until interest rates go down. And on the surface, that sounds like a smart idea because buyers do tend to focus on their monthly payment.
And rates absolutely do affect affordability. Even small changes in an interest rate can impact your monthly payment and buying power, which is why people pay so much attention to them.
But what buyers forget is that they are not the only ones waiting. There are a lot of buyers sitting on the sidelines waiting for the same thing.
And that's where things can get really interesting. If rates improve, there's a good chance more buyers are going to jump back into the market all at once.
Which means more competition, more showings, and more multiple offers. Homes potentially moving faster again, and sellers may become less willing to negotiate. In short, that could mean your $500,000 house will be $530,000.
Right now, depending on price range and location, buyers actually have opportunities to negotiate. Things like seller concessions, inspection items, offering a lesser purchase amount, price reductions, and even a rate buy down.
And during extremely competitive markets, all of those opportunities disappear because sellers know that there's another buyer waiting right behind them.
Another really important thing that buyers need to understand is that nobody can consistently predict the perfect time to buy.
There are so many things that are affecting the housing market right now. Inventory, buyer demand, inflation, the economy, even lending conditions, and all of those things can change quickly.
So if someone is waiting for the perfect rate or the perfect market conditions, there's a good chance that those people could be waiting a really long time.
And meanwhile, life keeps happening. Maybe your family is growing, maybe your rent keeps increasing, maybe you just need more space, or maybe you are financially in a better place and ready to buy.
Honestly, we always tell buyers that trying to perfectly time the market is usually less important than making sure that buying makes sense for your personal situation.
Are you financially stable? Do you have your down payment and your reserves saved? Is the monthly payment comfortable for you? Are you planning on staying in the home long enough so that buying makes sense long term?
Because real estate is usually a long-term investment. Most buyers are not buying a house for 1 year. They're buying a house based on their lifestyle, their goals, and where they see themselves over time.
And if rates improve later and refinancing makes sense, that may become an option for some buyers in the future. Obviously, there are costs associated with refinancing, and it's never guaranteed, but buyers shouldn't automatically assume that they are locked into any rate forever.
At the end of the day, every market comes with trade-offs.
Sometimes rates are lower, but competition is intense. Other times rates are higher, but buyers have more negotiating power and more inventory to choose from.
And I remember a time just a few years ago when rates were lower. I had a buyer that I was working with. We probably looked at over 50 homes and wrote over 20 offers, offering tens of thousands. I think the highest offer we even offered was $100,000 over asking price, and we still couldn't get them under contract. So definitely just keep that kind of thing in mind, that when rates do drop, the competition will definitely pick up. And are you going to be in a position at that time to compete? And honestly, some buyers are finding that today's market gives them more breathing room to make thoughtful decisions instead of feeling rushed into bidding wars.
So instead of trying to predict every market movement, we think that buyers should focus on what they can control right now. their finances, their goals, and finding the right home when the timing makes sense for them.
We'd love to hear your thoughts. Are you waiting for interest rates to drop before buying, or are you considering jumping into the market now?
Drop your thoughts or questions in the comments below. We would love to hear from you.
And if you're thinking about buying the Denver metro area or along the Front Range, whether it's in 10 days, 10 weeks, or 10 months,
it's never too soon to reach out.
Make sure you like this video and subscribe to our YouTube channel. Again, I'm Jill Jackson.
And I'm Kelly Mates.
And we're with the Colorado Homes and Living YouTube team. And we'll see you on the next video.
Take care.